Hey everyone, it's Mackenzie here with Hash Basis, and in this video, we're going to be looking at an example Stripe revenue reconciliation that we complete for some of our customers every month. Now, Stripe does have an advanced revenue recognition module, but if your company isn't at the stage where you want to pay for that additional service, then it is possible to use the reporting to still book accrual basis revenue every month. It's just a little bit more complicated, a little bit more nuanced, but we're here to help you guys out. So first I'm going to walk you through the specific reports that I normally pull out of Stripe. All of this is example data that I've downloaded and kind of messed with here, but all the reporting will look like this from Stripe once you actually download it via CSV. So the first report I run is payouts. And so this report just looks at the payments that are sent out of Stripe and that land in the company's bank account that is hooked up to Stripe. So these are just some examples here. Example numbers, this is saying roughly 50,000 left Stripe and was deposited into the company's bank. Now it's really easy to tie this out just by comparing this report to your standard bank reconciliation, and the two amounts should definitely tie. If they don't, then there might be an issue with cash in transit. So what I have seen is that, let's say Stripe initiated a payment on August 31st, but it might not have landed in your bank until September 1st, then there might be a variance between what Stripe is saying and then what your bank reconciliation says. So definitely have seen that before. The second report that I run is the payments report. So if you go to balances in Stripe, all activity, and then export all columns, these are the columns that I normally pull here. I deleted out just some sensitive information here, like the ID and then the amount, the fee, and the net. But you can see here what I do is I create a pivot table at the bottom here where I pivot off the type. This is a column that Stripe gives me, and I use this report just to tie out the total fees. I don't really use it for anything beyond that, but it's just a good check. So basically what I do is I sum up Stripe fees here, wherever it says fee, and then I also sum up the actual fee column, and then this amount should tie out to another report that we'll look at in a second. So really don't really use this one much except just to tie out the Stripe fee. Now, the report that I use all the time is the invoices, the basic invoices report. And so to download this, you go to, there's a tab that just says invoices, and then I actually export all invoices inception to date, like since the company started using Stripe. And it also exports all the columns, not just the default ones. And so again, data's been anonymized here, but these are some columns here that you definitely need to actually get the reconciliation done. The report exports with a million more columns, but these really are the critical ones that you'll need to do the month end reconciliation. The point of downloading the invoices tab here is to get the correct accrual basis revenue number, because Stripe may say one thing, but maybe you need to make some adjustments or you need to do something else here. But this forms the basis of the data for that calculation, but it just might not be the same as what Stripe is telling you on some other reports. Okay, so a couple of manual adjustments that I make to this data before I even start analyzing it. The first one is I create a new status column here, depending on when I run the reporting. So if I run the invoices report on the very last day of the month at 12:59 p.m., then I won't need to add this column here. But usually I run this report a couple of days after month end, and invoice statuses have changed between month end and when I'm pulling the report. And so the status column, the one before it, this is what Stripe is saying in the actual reporting here. But what I'm doing is I'm adding a status column to check what the status was as of the last day of the month. And so this comes in a lot when invoices have been paid on the first or second days of the month. So a good example here is, let's take these last two. So the paid column here, it says true because these actually have been paid, and Stripe gives you the paid at dates. And so these were paid on September 4th. But the invoices relate to, the date here is September 4th, but these were actually August invoices that the customer didn't get around to sending until September 4th. So really the invoice dates, if we were to artificially edit it, would be August 31st. Invoices were paid on September 4th, but the status here says paid because that's what they were as of September 4th. But as of August 31st, which is when we're reconciling to, these invoices were actually still open. And so that's the classic example of how that happens here. I think those are the two main examples, but Yeah, always take a look at paid at, and if the date is a couple days after month end, then you're going to need to update the status column here. Now for the other statuses, like if there's draft or void, I just carry those over, since that doesn't really change between periods. It's still going to be draft or void or uncollectible, something like that. But paid and open invoices they can likely change at the end of the month. Okay, so I add this column here, column K. Now I also add this column I here. Let me make this a bit more descriptive. Difference in amounts paid. There we go. And so this column here has come up for me recently because I've noticed that when an invoice says paid, there could be a difference in the amount due, what was actually put on the invoice, and the amount paid column here, which Stripe automatically gives me in this report. And so I'm actually going to filter off blanks and zeros here. And so what you can see here is that there are some invoices where they said that they've been paid, but the amount paid is actually different compared to what the amount actually on the invoice is. And so that's going to give some issues here because the revenue is being recognized in one section of the reporting, but then the actual payment isn't getting recognized evenly, even though Stripe thinks it's been paid. So this can come up a couple of different ways. The first way, let's say an invoice is sent to a customer, but then the customer doesn't actually pay through Stripe. Let's say they directly send a wire to the company's bank account or use something like Bill.com. Then that could be a reason why it's marked as paid, but it wasn't actually paid through Stripe. So in that case, you'll just need to manually reconcile the account where the payment was actually made. Now, the second one, or the second reason this can be different, is a little bit more nuanced and a bit more complicated. But whenever you send an invoice to a customer through Stripe, the customer has the option to pay automatically online, or they can actually ACH this Stripe bank, and then Stripe says, okay, this customer paid this amount, and they kind of like credit it to the customer's account on your behalf. So the point there is that it shows up as a credit, but the amount kind of gets stuck as a credit. It doesn't recognize as a payment of an invoice, and that amount that was paid never actually gets sent out to the bank. So this issue is still kind of up in the air, TBD. We need to speak with Stripe customer support to see what actually happens when someone ACHs instead of pays through Stripe. So that could be one reason why that is also off. All right, so after I add these columns here, then I make a simple pivot table where I pivot off the customer name and then the status here. So statuses are either open or paid, and to make sure to grab the status as of the end of the month. Now, what I also do is I open up the reconciliation from the previous month and I copy in the pivot table that I made then, making sure that the totals for open and paid are also within this reconciliation. Next, I take the difference between both statuses. So for example, the open balance at end of August was 96K. I subtract that from the open balance as of end of July. We get a difference or increase of 25K. And I do that for the paid column as well. So keep that in mind. That's going to be kind of like the basis for a revenue calculation. And then the second part is I look at our accounts receivable. So really the sum of the open column here is your accounts receivable because this represents invoices that are still open that the customer still needs to pay. Now keep in mind there might be a slight difference between what this reporting is saying and what Stripe is saying. It gets back to this example here where the customer or like the client sent invoice a couple of days later. So this may not be recognized in Stripe's AR, but it actually should be within the company's kind of adjusted AR that we're doing here. So we have our beginning AR balance, which we grab from the last month's pivot, and then we calculate what the monthly activity is just based on what the ending AR balance is. So ending AR in the books for Stripe should be 96K. Now, I also included a revenue adjustment here, which is common. So there could be additional revenue related to this product or service that's billed outside of Stripe that we would want to include as well, just to make sure that's being included in the total revenue calculation. So just adding some random numbers here. And so when we add up what the total revenue should be for the month, it's a sum of the differences here between current month and prior month pivot tables here, and then also any additional revenue that's booked outside of Stripe. You may not have this section here. I've just seen some of my clients have it, so included the number there. It also was a bit of a plug to help make the entry tie because these numbers are completely randomized, so it's not going to be exactly tying out as it would with a real Stripe report. So just wanted to make that caveat. Now, the last tab here is the balance report tab. So this report here comes from it's a balance summary report. And so this is going to be really helpful because it's going to tell us what the ending cash and Stripe balance is. And this should reconcile or tie out to your books. I always recommend creating a separate account in your chart of accounts called cash on Stripe. And this will track the ending and beginning balances that Stripe is reporting. So what Stripe is showing you is what the beginning cash balance was. It adds in the revenue, subtracts the fees, and then also subtracts any payments that are made out to the bank. These bank payments here should tie out to the payouts report. The Stripe fees here should also tie out to this all activity payments report. And then we get at the very end what the ending cash sitting in Stripe is, and this should tie out to your books. Now, what I typically do here is I look at, okay, here's the reconciled balances per the reporting that we run out of Stripe. Here's what my balances I have per QBO here, whatever your ERP system is. And then the difference is what needs to ultimately make it into the journal entry. So accounts receivable, that's being pulled from our invoices tab here, is the ending AR. Total revenue, again, is being pulled from the invoices tab, comparison between current month, last month, and then add in any adjustments. We have fees, which usually I pull from the balance summary or from the payments tab. And then we also have what the ending cash and Stripe asset account balance should be. We take a look at what's in QBO, calculate the difference, and then that difference then gets plugged into this journal entry. So for example, bank fees, that's going to increase the expense here. We need to increase our revenue, increase AR, increase cash on Stripe. And now the other receivables, this is the part I want to spend a little bit of time on. And so this actually gets back to the columns that we had or the invoices we had differences on. So again, if we just kind of filter off of this, these invoices had differences between the amount that was on the invoice and then the amount actually paid. In this case, we're assuming it's because the customer paid outside of Stripe and we haven't been able to access those balances yet. So if we add up this amount, we get roughly 8,000, which is what we're putting to other receivables. Doesn't have to be other receivables, but high level, it should represent the asset account where the payments actually are sitting. If they've been received yet, it'll be in the actual bank account, or other asset account. If they haven't been received yet, it'll be a receivable that you'll settle once you actually receive those payments from those customers. Okay, with that, let me know if you have any questions. Hopefully this helps if you're trying to manually rec out Stripe. I know it can be really difficult at month end, but hopefully this video helps you out. All right, thanks so much and have a great day.